Listen, I am not going to throw a giant bucket of cold water on our network coverage over the next 2 weeks, but do earnings matter right now, or is it really just all about the guidance?
It's mostly all about the guidance, but they matter if they beat, I think. We look at earnings season, and this isn't even something that's specific to the times of COVID, but it has morphed into Tech Week and Bank Week. In my mind, Tech Week is about 60 to 70% of the importance of the entire earnings season, and banks are about 30 to 40. So banks are honest right now. What we're looking for here is we know that they're going to be terrible. We'd love them to be less terrible. We'd love to look at guidance, and we know some have reaffirmed their dividend. It's going to be a lot about dividends in banks. We want the ones that haven't, we want to hear some sort of confidence from them as well. But it is a big deal. Yes, the market has to look at an unknown binary negatively. They have to look out and see, what are we worried about? So getting through earnings season will be a positive just on its own. Is it a big deal? Not as much as usual, because we know they're going to be terrible, but if they beat, it'll be good.
Yeah, and I've argued, Jim, and maybe you agree, maybe you don't. Tell me, please, that Wells Fargo may have surpassed Boeing as the most important stock in the market. I say that because, number one, I think they're the one or second largest mortgage holder in America. A lot of mortgage deferrals going on right now. They've got $20 billion in these CLOs, collateralized loan obligations, that they have got to deal with. Are we looking for charge-offs? The quarterly earnings number won't matter. What is the metric we need to hear from the banks to give us confidence?
Well, sadly, I think it's such a complicated thing that we're not going to know what it was for, perhaps months after this. So I'm not positive yet as to what exactly I'm looking for. I'm hoping that we digest it all and go, okay, that's pretty interesting. But the mortgage part of it will be a big deal too. So far, we've seen, in the broader economic numbers, we've seen less bad. Obviously bad numbers, but not nearly as bad as we've expected. So I'm hoping to see that some sort of that data from Wells Fargo.
Yeah, and we've got our RBI coming up later on, so I don't want to give too much away, but it has to do with the amount of stock at the top of the market, Jim. And I know I'm a bit of a broken record here, I get it, but everybody's piling into the same 6, 7, 8 names. It's worked. It's been a strategy that works. They're pulling the market up. I think I saw Apple and Microsoft are 54% bigger than the entire Russell 2000 or something like that. Do you worry that that's a top-heavy market, or is it a great opportunity to maybe find smaller names that will eventually maybe get some attention?
I absolutely worry that it's a top-heavy market, and I think it's because of a couple different things. The obvious part of it was the stay-at-home stocks and the new world that we're coming into. But the reality of it, in my mind, too, is that when you look at the world central banks and federal government of us throwing all this money into the system, it tends to go to safe havens. And I think the market has just become the knee-jerk that these companies are the ones, and they are the companies with the best balance sheets, but I think they're becoming a store of money, and I think it's a little bit dangerous. But again, I think when markets start to rally like this, the way we've had since that March 23rd low, I think you're silly if you're not looking for something to be a little bit worried about. And yes, I am worried that they're top heavy.